Welcome back to Rockstock Channel. It is Wednesday, August 21st, and we are back with a Rockstock recap. So it's just Rodney and me today. SQM just had their second quarter call, which ends the earnings season for Q2. So we'll comment a little bit about that. We're here in the summer doldrums. I always like to celebrate Woodstock, 55 years ago. Summertime blues I've used before in my Lithium Bull commentary, which is a Who song who played at Woodstock. But I remember back in the day in 2018, I used Who's Next, and the song Bargain, to talk about Kidman resources, and so to hear the kind of commentary about Mount Holland, and the status there. I'm going to put up here just some commentary from SQM where they talked about they might be reevaluating or reassessing, some of their projects. I thought that might mean Mount Holland. In the results call, they said, no, Mount Holland, they're producing. They already have 100,000 tons of spodumene. They have some tolling arrangements, so they may even be selling some of that spodumene. And the reassessment was, whether or not, the sulfate that they produce from the Atacama, are they going to, convert that, in China and sell that immediately? That was really the only reassessment from what I gathered from that, earnings call. I think they said that they are producing, 210,000 tons, but they're selling, 190,000 tons. That 20,000 difference is inventory, but they just said that's 1 month. It's working capital. It's no big deal. But interestingly, I remember when I started really covering and watching SQM when they invested in Lithium Americas, I think in 2015, now nearly 10 years ago, they were producing 36,000 tons, and their stock price was $15, maybe $20. It's now $35, and they're producing, they have capacity of 210, selling 190. So huge increase in sales volumes, and Lithium was this great investment that we all, have been watching. But as we mentioned, I think in one of our other videos, Lithium has not been the long-term investment that we all thought and loved it would be. It has become like any other commodity, a trade, and an extremely volatile one. So the point here is, I guess, embrace the volatility. And as we've been looking at the landscape of the lithium scoreboard, we believe lithium equities are pricing in perhaps much more bearish scenarios of future lithium prices than is justified. In some cases, in junior perspective, companies are trading for less than replacement value. We were talking, I do want to talk about, there is M&A happening in this space. We will talk about Pilbara and Latin Resources, but the valuation of that actually was similar to what, SQM or what Wesfarmers paid for 50% of Kidman, but it's also similar in price and reminded me, in a share for share exchange when Lithium Americas bought Millennial Lithium for $400 million, all share transactions similar to the Pilbara Liontown. And you were mentioning, Lithium Americas now is trading itself at only a 450 million market cap. So you could not build what Lithium Americas Argentina has for $450 million. And that's true of a number of companies across the lithium equity scoreboard. We were speaking with a very large investor out of Australia, in a number of lithium companies over the years. And he said, and watching very closely, the Arcadiums and Albemarle, he very much believes that we will see lithium at $30,000, $40,000 a ton. He just doesn't know if it's 1 year from now, 2 years from now, 3 years from now. He said it's contingent on incumbent behavior, also demand, and policy. And on incumbent behavior, SQM is not slowing down, right? They just said they're investing for growth everywhere, right? In Mount Holland, in Azure, they've made investments in Tolga, in Sweden. They see the long-term trajectory, and they're not really stopping, their investments. Albemarle and Arcadium have slowed down. Minres has slowed down, I guess in Wodgina. Not sure what Ganfeng is doing. On the policy side, it's very opaque, right? What's going to happen in the U.S. with the election, and we expect to have some, commentators for that, in the coming weeks. I don't want to get too much in the weeds of that, but whether or not Trump wins or Kamala Harris wins, but also what happens in the Senate and the House, is going to be very, trying to analyze that is like trying to analyze what's happening in China, from a supply side. And, so just analyzing lithium has become much more challenging with each given quarter. However, you can make this argument, Rodney, whether or not price is going to be higher, there's value in the scoreboard if you buy certain stocks and have a 3 to 5 year view, which is what for most of the time we've been commenting on, lithium about is what you needed to have is a 3 to 5 year view. So the thing is, you got to trade the volatility, and we all may have gotten, a bit over exuberant, and, the 10 baggers are hard to find. But even companies like on our Getting to Know You, Q2 Metals had great exploration results. Their stock went from, 25 million market cap to 80 million market cap in 2 weeks, right? So there's still opportunities within the space, and Latin Resources got bought, surprisingly. If you bought it, kind of at the bottom, you would have had a 50% upside just in a short period of time. We expect more M&A. Rio Tinto is circling, and you've had deals like EcoPro and Green Tech. LG came into Liontown. AMG came into Savannah. So there's activity, but it's a difficult market. The quarterly results and the second quarter, lithium price just fell a lot. And we had a bunch of commentators come on in April saying, like, we bottomed, Red Spencer in April. We thought, like, post China New Year, we bottomed, and, here we are wrong again. Goldman's been right. We're at 10,000, 11,000. And, that's it is what it is. What say you, Rodney?
So I've done quite a lot of work around China and just trying to get a handle on sort of the bigger picture, and the difficulty here is, and I mentioned this earlier, is historically in the last downturn, the vast majority of the feedstock and production was coming from ex-China, where we got a very good line of sight, English financials regularly updated, driven by economic fundamentals. China, on the other hand, is having a property bust, so they are pivoting to an export of more higher tech products. So they're going for EVs, for batteries, and for solar panels, amongst other things. As you know, they export quite a lot of steel. I think I saw Chilean workers protesting their last steel mill in Chile is shutting down because China's undercutting them by 40%. So the problem that I've been having, Howard, is there is, in my opinion, because China always preempts these things and plans, is there is overcapacity in the Chinese system for a lot of the things we're talking about in terms of EVs, cars in general. I understand that China has the capacity to produce half of the world's demand, which is a pretty scary number. So what you're seeing on the export side is it's not just EVs, of which there are a lot being exported, but it's also ICE vehicles as EVs replace ICE within China, and the same with battery. But there is no profitability largely across a lot of the Chinese landscape. I saw a chart, I think, in the FT, about 30% of industrial companies are profitless. I've seen forecasts of only 19 out of 134 EV makers will be profitable, I think, in 2030, which means there's 115 of them that are going to go out of business, most likely. So that means, more possible, sort of corporate deals or otherwise bankruptcies, more inventory coming, and we're seeing that in the battery cell market. So my issue and my concern is that China is not operating under economic fundamentals. They're doing it under some bigger government plan and ambition. So you're seeing a lot of these things being produced at insanely low prices, and they've built for that capacity, and lithium has come under pressure under that system. So at the moment, there are storm clouds that have already been on the horizon that will continue to be on the horizon. The question is going to be, in terms of the thesis for a rise in lithium prices, is the marginal cost producer needs to be a greenfield ex-China project where 20 to 25,000 is what's needed in order for that greenfield project to be built. Looking back in history at lithium prices in 2018 and 19 and comparing them to today is, in my opinion, flawed and wrong, because historically CapEx costs were much lower, so were OpEx. We've been through COVID, we've been through an enormous inflationary cycle, and yesterday's 10 to 15,000 to generate a 15 to 20% IRR is today's 20 to 25,000 at least. So again, it isn't even, you can argue, is it inflation? Is it money supply? Regardless, costs have shot through the roof. So the question is, can China backfill what looks to be high waste, enormous, amounts of tonnage of ore that you need to produce an LCE out of lepidolite or some of the sort of lesser quality material in Africa? I'm still getting emails of people peddling that stuff, most of it under 4%. So can they, with Tibetan brines, a domestic spodumene going into Africa, can they backfill what looks to be vulnerable production with better quality material and lower cost material in time so that the oversupply thesis continues? That's something we're going to have to wait and see, because some of the projects, look pretty good, and Pilbara is not slowing down, Sigma is not slowing down, Greenbushes isn't slowing down, so SQM. So these are not moves that I was hoping to see. That said, everything is not lost in lithium, because, as I mentioned to you, if you look at what lithium price is embedded in some of the equities that we cover and keep an eye on, it's mass destruction is what's thrown in there. There are quite a few companies I see trading at numbers where you couldn't go and peg that ground, even if you knew it was going to be a success, peg it, drill it, and get to the tonnage that they have for the price of their market cap. So provided there's not going to be unfavorable dilution in order to stay alive, to wait for the market to turn, I think there is some value, and I think that is reflected in some of the deals and the M&A that we're seeing now, because in the end, you can't, unless someone shuts down or gives back the ground, a lot of good ground is pegged. So if you wanted, if you're a Rios or whatever, you need to negotiate a deal, but now is a good time to do it. So it's not so much that I am as bullish as the numbers you mentioned earlier, but I feel like the market has priced in an even more bearish scenario than what I'm envisaging. I do think at some point in time, underinvestment and possibly some discipline within the incumbents and demand eventually picking up, and where I stand on ESS and renewables, I think that segment of the market's going to be huge, that we will see a turn. And then, with these companies having such low spodumene and chemical prices embedded in in their valuations that, you could see some good runs in various shares. So I think that's the appeal. I guess the risk is always how long does it take? But we've had a bit of a flurry of deals coming through. We've seen in the market now, and
The deals
China,
have come at like decent premiums. Like AMG came into Savannah, I don't know, like a 35% premium. Again, it was a minority stake. Green Tech, Echo Pro, and certainly Pilbara Latin. I remember in our interview, I think it was our interview with Arcadium, or maybe it was Paul Graves, saying somewhere else, like it's hard to do M&A, unless you have willing buyer, willing seller, right? And you had that in Latin's case. One comment, hey, let's talk about that a little bit. I spoke to a long watcher, an Aussie, of the lithium space, and he said that deal was made in Perth, right? Chris Gale, Dale Henderson. Chris has been, that Latin resource. It had multiple different projects in there for a long period of time, and they had a Macquarie process, for offtake. I think the valuation was pretty good, and Dale Henderson mentioned that Latin did have other options, but taking undervalued Pilbara paper, was an attractive one, and
I was
optionality.
about to say, Howard, I think for Chris and for the rest of shareholders, the rollover relief into getting something like Pilbara, which is as good as cash, but I think he's right. I think, they're not in a position to need to issue equity to stay alive. They still are profitable, and they have quite a lot of cash on the balance sheet. So when the tide turns and they complete, I think it's the P680 and the P1000 getting to 1 million tons, and then possibly Latin, they'll be perfectly positioned for a recovery. I mean, if spodumene goes back to $2,000 a ton, Pilbara is just absolutely going to print with the higher volumes. So I think from that perspective, he wasn't taking sketchy paper or a discount, and I think it sounded like Chris was happy to very happy to have Pilbara paper.
Yeah, and so from Pilbara's perspective, what do you think? I mean, the share price fell after the news, and they didn't go into WA. They could have gone after Wildcat, Global Lithium. They didn't go into Quebec. Everyone thought they might partner with or buy Patriot. So what's your read on from a Pilbara perspective?
I don't know. I mean, in my previous life, in terms of derivatives and so on, there could have just been some arbitrage trading in terms of locking in the relative trade, with
okay. Oh, so you think that's why it fell? Okay.
Scalping the differential between where Latin was and where Pilbara is in some of the volumes. But you made the point that I think it was only 6%. So I can't believe that even if someone was indifferent or slightly negative on the deal as a Pilbara shareholder, that they would balk at that. So I think to me it was just excess volume for arbitrage.
Okay, so the share price movement wasn't Mr. Market, reflecting negatively that they didn't like the deal. It was just merger arbitrage.
Yeah, if I remember, Latin was trading at about a 10% discount, I think, to where the offer was. So my guess is you would go along that and short Pilbara and scalp it.
Right. Okay. But look, it buys Pilbara optionality, right? Like it increases the probability that Salinas becomes part of the lithium supply, but I think it probably pushes the date out later, right? They probably would have gotten financed by some Chinese group and gotten into production, very quickly, like Atlas is hoping to do later this year, or some other groups. So, I mean, from a discipline point of view, it's similar to like Arcadium and or Allchem merging with Cobre, Livent merging with Allchem to form Arcadium. Now the Galaxy project is being pushed out whereas if it stayed within Allchem, it might have been come out sooner. To the extent that you have more acquisitions of single project companies, within larger companies, the cadence of bringing out the supply will be slower and more disciplined, I guess.
Yeah, look, I think,
Howard,
we know of a lot of, people where you said, the Chinese offtake guys would rather have spodumene than the lepidolite and so on. But I guess you've also got to be cautious of a Trojan horse of guys coming in, because it's in China's interest to have everyone come online.
yes.
Unless they're offering you a decent floor price, they will be more than encouraging for the low-cost producers to get into production and get stuck with material to get rid of.
Even if they're offering you a low floor price, the Chinese don't adhere to them. So I wouldn't take that. It's the upfront cash that matters. But with Pilbara going to Brazil versus the others, and what does that say? And Quebec, WA, they didn't get involved in the fray with Minres and Hancock last year.
Yeah, I mean, it's an interesting one in terms of the timing. Again, a question of, you said it was a deal done in Perth. I think there's quite a few players, including Minres and Hancock, that have got, red ink on their stakes. So they're not going to want to sell possibly out of some of the projects that they have, because some of them are down substantially, in the sort of 75 to 90 something percent. So what kind of a deal can you do? Whereas I guess with the Latin, they could do it around the share price. But what would you do with some of the others where they bought in near the top? Is a tough one.
Mm-hmm. Right.
But I do think, so I mean, I do think that something will happen on those. I guess it's a question of timing and whether, you might see Minres or somebody else, stepping in when the time comes. But, I think as much as there might be a recovery, one definitely wants to be on the low cost end and on the decent sized resource in order to get strategic partners and to get it funded and built. So, I guess my preference would be for those projects. So, ideally, and in that instance, Brazil has proved, if Latin is anything like Sigma, that you can do it for a reasonable price.
Yeah, and I think that's the bet, that you get permitted and you can be a low-cost producer, and it's just spodumene. It's not like complicated conversion. So, and it's near term. So in Western Australia, again, may not have a willing seller, a complicated deal to do. But what about, in Quebec, it could have been made in Perth with, Patriot, or Winsome.
Again,
I
guess it'll be a question of price. So
yeah,
my guess is that, Patriot's seen its share price come back, and the guys, have drilled up a massive resource. So it comes down to the numbers, and how that looked. But I think, Latin is much more nearer term.
Yes.
So
I think that plays into it a lot. The time duration and permitting, consideration. Patriot and other things in Western Australia, in Quebec have, there are other risks. But look, Brazil is risky, and some of the commentators covering Pilbara, talked about some Aussie companies going into Brazil and didn't have great success there. But they did point to Sigma. Sigma was a great success to the extent that this was made in Perth. Maybe Anna wasn't willing to play ball, right? No doubt, they had some sort of conversation there. But
again, I think, just mentally out is, when you've come from $50 down to 10 or whatever it is, it's not the time you want to be doing, if you believe in the long-term thesis and you've invested 10 years in something, it's a tough one.
And
It's a
they're
tough one.
they're a producer now, and they have good financing, and they could expand with, so they're taking Pilbara's approach. They're taking SQM's approach. Just pedal to the metal. The market will be there, and when the higher price comes, they'll get a higher price. I mean,
Well, I
so
mean, I think if if you can wash your face at these levels, but still expand your production, then you are in a very privileged position when this market turns, because you're going to be fully ready for the appreciation in price. So as long as you're not the one falling over, it's and you can wash your face and cover your costs, then there is some method in that madness. Again, it's, I guess, a question of for how long will you have to do that.
okay.
I guess that's the trick, is will at some point we see an adjustment in production profiles that tips the scales in time and puts this market back in shortfall.
Yeah. It's likely to happen, right? I believe in Arcadium and Albemarle saying, like, the longer we have disinvestment from their side, the sharper the rise may be on the other side, like happened a couple of years ago. So let's see if that happens. It's not ideal to have such massive volatility, but they're all the demand drivers that they see, and the growth that they see. I mean, people have they tempered their growth forecast from the 20 to 25%, for lithium to something like 15%? What's your read on that?
Yeah, I mean, I guess it depends, but I think, there's a couple of things. There's the sort of shift to plug-in hybrids away from full battery electric, which kind of has caught people again. BYD's at the helm on a lot of that, but I do wonder, as they push so hard into the export market for rest of world, as I said, with places like I've lived or what have you, where there's very little charging infrastructure, the only game, hybrids are kind of the logical step solution before you go to full battery electric. But yeah, I mean, I think, where the US is and what you've seen coming out of the OEMs, and you sent me something, I think, on Ford, taking a step back, and we're seeing, some of the cathode plants, there's delays in that, and battery cell and so on. I think, the Biden ambition of 50% EVs by 2030 is a pipe dream now, I think, regardless of, even if Trump was supportive. And Europe, as I mentioned to you, a lot of these things were initiated subsidies when there was money to be had, but now that country balance sheets are looking vulnerable, which is, something I believe that people need to keep an eye out on China, because a lot of what I've described is China's throwing a lot of money, as are others, for very little GDP growth, and debt to GDP has exploded on an aggregated basis in China, as it has elsewhere. Is, with Germany with no subsidies and expensive EVs, EV sales have cratered. I think they're even negative or flat for the year. So demand has drifted back. There is still fundamentally, we said this all those years ago, is in the end, the battle is won at the lower cost end of the electric vehicle market. And, China has a lot more EVs that are cheaper than their ICE equivalent than Europe and the US. So we need to see more models and more better priced and competitively, relative and absolutely, to get a demand to where it can be. I think priced right, how there is demand, and where I am on ESS.
Right. Well, Western OEMs are retreating from China. Their sales are imploding. That's just a lot of headlines there, except for Tesla. Tesla's doing well. We have Tesla having their robo-taxi unveil. It was delayed from August 8th. It'll now be October 10th. You don't have nearly the kind of hype you had ahead of Battery Day. But if you remember, Battery Day was originally supposed to be May of 2020. It ended up being in September. I'm hoping, I'm holding out some optimism that maybe there'll be some details of a low-priced car in connection with the robo-taxi discussion. Elon Musk did talk about growing. I think they're producing 1.8 million cars, and they have capacity of 3 million cars. Okay, sorry about my change background. I had a problem with my other computer. I was just commenting. Hopefully the robo-taxi unveil will include some details on a cheaper car. The Cybertruck I'm seeing every day, in New York at various places, very prominent. So, I mean, that is gaining some traction. Tesla Energy was very strong, 100% plus growth. But as a demand surprise, fingers crossed, right? A cheap model, from Tesla would be positive. I think we're going to get interest rate cuts into September. The backdrop is not bad. Tesla stock's doing okay. There's been a broader, if I would comment, it's not just lithium that's being hurt. Iron ore has been hurt, copper's been hurt since the, springtime enthusiasm. Our Aussie friends are basically saying the only thing that is exciting is gold. One comment I think we made in the lithium bull, but we recorded 2 videos which are going to come out after this that are not lithium specific, but we are diversifying a bit and going back to our roots. I started RK Equity 22 years ago with Robert Friedland's Ivanhoe Mines in Mongolia and copper as my first ever company that I worked with. It went from $3 to $30 or $28 at its peak. And kind of learned the trade there. So we interviewed Paul Gate, who's Anglo American's group head of strategy and a former analyst at Alliance Bernstein. So would encourage all viewers, if you have some interest in copper, we do, with a 5-year view. We think copper broadly, and we're talking to a number of individual copper companies that we hope to bring to you, in the not too distant future, offers a similar potential to lithium. And we also interviewed an academic, Morgan Bazilian of the Colorado School of Mines and the Payne Critical Minerals Institute, to talk about solar. He was heavily quoted in an Economist article, essay, deep dive into solar in July. And so we'd encourage you to watch those. And we're also looking at some other materials, niche materials. Like we made a great name for ourselves here in lithium, but there are some other interesting, small metals that are not so well known, one of which is cesium and power metals. We expect to be interviewing Hayden from the CEO, Hayden, in the coming weeks on that. And we also like the metals company. We did a video for our viewers who haven't seen that. This is kind of mining nodules on the bottom of the seafloor, which is a very interesting opportunity if and when they get permitted. But we think there's a lot of momentum toward that happening. So we're looking at different things because lithium is still good backdrop. We've been through ups and downs, lots of volatility, and we don't know how long this is going to last. But there are other pockets of investment opportunity in the materials space. And in my 22 years of doing this, we're tapping into our networks to see what could be of interest to us and to our viewers. So stay tuned for that. What else should we talk about, Rodney, before we just kind of conclude this rock stock recap?
Any thoughts on the IRA or on the US side from you?
Yeah, well, we had the 2-year anniversary of the IRA. In both Paul Gate and the Morgan Bazilian interview, and in all of the Q2 quarterly conference calls, I say, look, the long-term thesis is intact. The demand is here, with just the timing, is hard to predict. But China has, in solar and likewise in electric vehicles, it's one party, and they've executed their business model, their corporate, government policy, made in China 2025, has focused on, you're saying it's not just a pivot from real estate to these things, but they've been focused on these clean technologies for a really long time. The IRA as industrial policy, it's only been 2 years, right? Where we kind of like woke up and are recognizing we need to respond to what China's been doing for 20 or 30 years. So they have a very long head start, but we don't, if Trump wins, right, you don't have continuity of policy like you have in China, and it's, but Trump may not win, right? So there are other groups smarter than me who are analyzing various outcomes. I think Low Motion had some probabilistic, if it's Biden, if it's Harris or if it's Trump, a lot will depend on the Senate, but a lot is going to depend on, Trump's tax cuts from, 2017 are due to expire in 2025. And that's going to be a major focus legislatively everywhere. So if he's in power, he's going to push to preserve them, and he'll probably look to cut a number of things from the IRA. If it's Harris, they're going to look to raise taxes and keep a lot of the IRA. But I think from a critical minerals point of view, a U.S. ex-China supply scenario, there's bipartisan support for that. Hopefully, policymakers recognize what you said. The ex-China supply needs to be done at $20,000 to $25,000 a ton. A very interesting. What's most immediate term is what's going to happen with Thacker Pass and with Ioneer or any other loans that Jigar Shah currently has under conditional approval. What's taking so long to kind of finalize that, I'm not sure. I think it will get done. I hope it gets done. I hope Ioneer gets done. This is kind of government and corporate policy. I kind of think I look at Thacker Pass and I see it's like CATL or BYD being GM, partnering with low cost kind of government funding. Is Thacker Pass like America's lepidolite?
You still need to produce low cost EVs that people want to buy. The economics of solar with battery backup or any others or nuclear or whatever, they've got to stand on their own largely, whereas EVs, those things economically have their merits, whereas EVs need to be competitively priced relative to internal combustion engine comparables, and you need a charging infrastructure that people feel they can trust and rely on. And that is the foundation of everything. So there are lots of subsidies, but you're right, it's only the second anniversary, but at some point in time, we need to see major progress on that front.
I agree with you. And I think the EV subsidies are at substantial risk under a Trump administration. And that's why you're seeing the pivot to hybrids, and the backtracking on a lot of the ambitions from Ford and GM. But, I think under Trump, he may let CATL and BYD build in America, right? And if he does that, I hope they allow like Ganfeng and others to kind of come in and build. We got to build the supply chain. We got to build cathode plants. As you said, I think Umicore is holding off on their Canada plan. Tough lithium times. We've been through tough lithium times before, and we always kind of come out on the other side of it better. It's a question of timing. Lithium is not, again, it's a trade. Lithium has been a trade. If any, the history teaches us anything.
Agreed. I guess how
buy low, sell high.
The last in a parting shot, as I said, is I have a, there are clouds, but at the same time, I think selectively, some of the projects that are out there that look to be that they could potentially be of good scale and good grade and good quality are trading at with quite severely low embedded prices in their valuations, which are even beyond where I think the market's at. So people have got to decide. I think projects that that aren't going to meet the scale and grade and get strategic partners are probably going to have a very, very tough time, because we know how hard it is. So selection is everything. And as you say, it is a trade, and you need to, I don't think you can just broadly throw money at it. You've got to be selective in what's going to attract capital and survive, to fight another day and make it when the market turns.
There's, Arcadium's having an investor day on September 19th. Arcadium, as well as Sayona, as well as Winsome and Patriot, are also having site visits in Quebec in mid-September. There are some other conferences coming up. So the news flow will continue, and look out for, hopefully another M&A surprise somewhere down the pike.